we are all about transparency. It's not about creating black boxes. We're not trying to overcomplicate the investment decisions. What we're trying to do is put together the complexity that is required, but in a completely transparent way. And I think that's doubly important for sustainability investors who also want to have that transparency around what are the fundamental decisions you're doing, but also how is ESG impacting your investment decision making, and more importantly, the return outcomes that you deliver.
Welcome to The Greener Way. I'm your host, Michelle Baltazar, Executive Director of Media here at FS Sustainability. We are recording on Gadigal land, and we pay our respects to the traditional custodians of country and elders past, present, and emerging. Our guest today is Ram Rasaratnam, CIO of Equity Quant Investing at AXA IM, which is part of BNP Paribas Asset Management. Ram has spent decades working at the intersection of data, fundamental investing, and sustainability, long before ESG became embedded in mainstream investment conversations. Now stick with us until the end of the episode to hear why some of the core assumptions that even experienced sustainability professionals hold about quant investing. Yes, I know you're thinking automation, black boxes. None of these really reflect how leading investors build portfolios today. And so with that, Ram is in the studio with us here in Sydney, but he's based in Singapore. So Ram, thanks for joining us.
Thank you for having me.
Now, I think I've read somewhere that you've described quant investing as fundamental investing at scale, which really challenges the idea that quant is all about numbers and detached from real companies. So for our listeners who are new to the field of systematic or quant investing, tell us about the company that you work for, your role, and what do you mean by this?
So I definitely understand where that perception comes from, and that is a narrative that a lot of systematic and quant managers use to explain their proposition. But from my experience, what I see is that quant investing is actually quite a wide field, and it's a broad, it's a big church, and there's lots of diversity in approaches and techniques that individual managers can take. Where we are on that spectrum is really thanks to our founding father, Bar Rosenberg, who started the firm 40 years ago. What he set out to do was to do the role of a fundamental analyst and a fundamental investor, but to do it at scale across 20,000 companies in a repeatable, systematic way. So all of our stock selection models are really grounded in fundamentals. What I mean by that is that we are trying to build models that forecast what a company will deliver in terms of sales growth, in terms of earnings growth over the next 12 months, maybe over the next 3 years, looking at trying to forecast their profit margins, trying to forecast the probability of them making a dividend cut, for example. So it's all in the space of what is the company going to do? And all of our models are with that hat of how do we get there? How do we forecast that? What kind of data do we need? What kind of techniques do we need? And we've been doing that continuously for 40 years.
Happy 40th to the business. Now, many of our listeners are already deeply engaged with sustainable investing because I understand you work across both and you've talked about the double bottom line. But when ESG and quant investing come together, what do you think is still least understood, even amongst the seasoned professionals in this space?
One of the questions that investors, ESG investors have and have had for, we've been running the strategy in in Australia now for 12 years, is what is the impact of these sustainability considerations in my portfolio? What is it doing in return space? And I think that's an area where systematic investors, quant investors in particular, can help answer that question. But I think we've done a better job because of the way that the approach we've taken to building that sustainability portfolio. And it's to really have clear steps in that process and be able to separate the ESG decisions from the fundamental investment decisions. So, and then the way we've approached that is to build a fundamental portfolio as we would with our ESG considerations, and overlay the ESG considerations in a way that allows us to separate that and then attribute those outcomes, those return decisions, so we can have that conversation and explain where positive and negative returns are coming from, and what the sustainability piece of it is contributing. And I think that's really resonated with investors, and we're finding that really get more traction now as well.
Now, I don't want you to feel like, my goodness, I have to constantly defend why I'm in quant investing or why it's quant and ESG. And luckily for us, our listeners are quite technical. So you can talk about structural inputs, or you can talk about the nitty-gritty of what makes your investment approach different. You have spoken publicly about tools like neural networks, but tell us more about the engine behind the work that you do.
It's a great question. And I think it's easy to get bogged down in the buzzwords and to forget the basics of what we're trying to get to. So to explain what I mean by that, we introduced our first neural network around 9 years ago. We built our natural language processing capability around 10 years ago. So to be able to read text, turn it into understand the text, understand the meaning, try and detect sentiment and tone in the language, and turn it into an investment signal. So we have a long history in that. But for us, it was never about using these techniques for the sake of it. It was always about, what insight can we get from it? Is there information there that is not being tapped, that we don't have access to? And for us, these enhancements and these improvements across the field of machine learning that have been happening over the last 5 and 10 years has really opened up our toolbox, and it's really made data sets accessible to us that maybe were more accessible to humans and fundamental investors. And it's really meant that we're now able to expand the types of signals we're able to create, always linked to that ethos of what we're trying to do. How do we think we can solve equity markets? How do we think we can add value? And these techniques and the new data sets that these techniques give us access to help us do that better.
You've kind of answered my next question, which is, what is the next meaningful evolution of quant and ESG investing? So it's all about this new data sets, and the toolbox is much broader and deeper. You've been in the industry for more than a couple of decades. Is there anything else that still surprises you these days?
Markets continuously surprise me, and that's one of the joys of being, why I've stayed in this industry for so long, that it is a ever evolving, ever changing landscape that, as a quant, our premise is that the future will look something like the past, and that we learn from that past and use it to build portfolios that then deliver superior returns in the future. But one thing 20 years has shown me is that the future definitely does not look exactly like the past, that it's always changing. And that's what makes it fun and interesting. So it's about, and that's where, I have an engineering background and a data science and a computing background. And that's where all of those skill sets become important. And it's a challenge, but it's a fun challenge.
If there is one mindset shift that you'd like sustainability-focused investors should make about quant investing, what would it be? Especially for those who are still thinking about ESG integration, climate risk management, biodiversity risk management through the lens of present crisis and circumstances versus long-term value creation.
I would say, again, going back to this idea of quant investing being a broad church, it would be to remind your listeners that there is a section of that field where we are all about transparency. It's not about creating black boxes. We're not trying to overcomplicate the investment decisions. What we're trying to do is put together the complexity that is required, but in a completely transparent way. And I think that's doubly important for sustainability investors who also want to have that transparency around what are the fundamental decisions you're doing, but also how is ESG impacting your investment decision making, and more importantly, the return outcomes that you deliver. How are those two things interacting? So we have been in that space now for over 13 years, delivering those types of outcomes, but also that transparency to our clients. And we're well experienced and look forward to doing that with more clients in the future.
Bonus points for not mentioning human intelligence and robots in this podcast. But once again, Ram, thank you for joining us.
Thank you.
This is The Greener Way. I'm your host, Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.